your proof submission that doesn't get rejected by the payroll department. My name is CA Saikat. I have been working with ClearTax for past 2 years as a internal CA, and presently my area of expertise is income taxes and international taxation. Right. So without further ado, let's just dive into today's agenda, what we are going to look. Right. So first of all, we are going to see what are the tax saving benefits, tax saving opportunities that are available to you. Second thing is, we are going to look upon why usually the income tax proofs that has been submitted by you gets rejected by the payroll department, and what are the steps, what are the precautions you can take to ensure that they are not rejected. Finally, we are going to look at the excuse me, during the COVID, if you have made certain investment during one time period or another, what benefit you can avail during this time or next year, whichever will be beneficial to you, much more beneficial to you. And finally, we are going to see a quick demo of ClearTax e-filing portal, where you can file your tax return within a period of 7 minutes, right? Excuse me. Now, first things first, we are going to discuss what are the options available to you so that you can save the taxes. So, when you are declaring your investment proofs, tax saving investment proof to your payroll department, usually there are a couple of big sections under which you can claim the TDS. Now, most of these things are well known to many people, but there are a couple of items that are not really talked about, and without knowledge of this, people tend to miss out declaring these expenses or investment items because they don't really know about this. So we are going to take the road less traveled to get the best out of your investment and your expenditure, right? So first things first, the biggest section that comes into our mind when we are talking about tax deductions is 80C. Now 80C is a large section under which there are multiple tax saving instruments that are listed. So first thing is your EPF, usually EPF, that is your employer provident fund, that is a part that is deducted from your salary, and that amount, whatever the amount that has been deducted, usually gets deposited in your name in the books of government, so that the government can take care of it. So that thing is already reflected in your form 16. So for that, you don't really require any proof submission. There are other items though, for which you shall require to deposit your proofs. So first things is under 80C is your children tuition fees. So if you have a children and you are paying for their education, then most definitely you can take the benefit of so I believe there might be an issue with the audio, so I'll just speak louder a bit. So one thing, your children's education fees. So if your children are attending school, then you must be paying some sort of fees for their education purposes, right? So that fees, whatever the amount you are paying, can be taken benefit of under 80C, right? So for that purpose, you shall require the pay receipt, the tuition fee receipt that you are paying, right? That needs to be submitted to your employer. Second thing is your life insurance premium. So if you have taken a life insurance policy that for which you are paying a premium each and every year or monthly, whatever the payment schedule it may be, that amount can be claimed under 80C as well. Furthermore, if you have taken a home loan, any amount you are repaying towards the principal, that can be taken as deduction under 80C. Now, one thing you should remember to claim principal on home loan payment, the loan needs to be disbursed by a banking institute. So that particular thing is not really applicable for 24B. In 24B, that is your interest component, whether you take the loan from a banking institute or any other person, you can take the interest. However, if you have taken a home loan and you are paying the principal, then that amount can only be claimed if the loan has been disbursed by a banking institute, right? Moving on, any amount that you are paying for your pension plan, that also comes under 80C, the limit of 80C. The pension plan is categorized under 80CCC, section number 80CCC, and that amount is also deductible under 1.5 lakh, that is the prescribed limit of section 80C. Moving on, if your contribution, you are on your own contributing towards national pension scheme. Now this is a very great plan introduced by the government to save for your future at the time of your retirement. That is a very good plan actually. So if you are contributing towards your NPS, then that amount can also be taken under 80C. Your employer contribution towards employer NPS. So some of you may have given the instruction to your employer that you need to deduct a certain amount of my salary as NPS contribution. That amount can also be considered as your tax saving investment. Now the best part of employer contribution is it is over and above your 80C limit of 1.5 lakh. Now let's see, once we discuss all these tax saving instruments, we are going to take up couple of examples so that we can understand these items with a little bit more clarity, right? Moving on, your employees contribution to NPS. Now this might sound like I am repeating myself, that earlier I have already mentioned your contribution towards NPS. Again I am talking about your contribution, your own contribution towards NPS. However, there are two sections that governs your contribution towards NPS. One is 80CCD1, another is 80CCD1B. Now the key difference between is, if you are investing under NPS, then it is usually taken under 80CCD1. However, if you are investing additional amount in NPS, that can also come under 80CCD1B. And the best thing is you can take a deduction, additional deduction of 50,000 if you are contributing towards NPS, right? So this is all about the deduction that covers under 80C. Now let's take an example to understand all these matter with a little bit more clarity, right? So let's say during the year you have invested 1 lakh rupees in life insurance policies, right? You have paid a premium of 1 lakh. Furthermore, your children's education fee is coming up to 50,000 rupees. On top of that, you have taken up a national NPS account and you are contributing towards NPS, tier 1 NPS account. And the amount in there is, your contribution is 30,000 rupees, right? So how these entire amounts can be claimed under tax saving investment, right? So first of all, we will take out the entire amount of 1 lakh, that is your contribution towards pension plans. Second thing is your children education fees, 50,000 rupees, that will be falling under 80C as well. So 1,50,000 rupees is completely taken care of by these two items, your life insurance premium and your education fees. Now what about the additional 30,000 rupees that I have contributed towards NPS? That additional 30,000 rupees again you can claim under a different section, that is 80CCD1B. This amount is, there is a box to declare this item in ClearTax portal. So if you have indeed invested in NPS on your own, then you can show this amount and take the benefit for it, right? Moving on. Let's see what are the other tax saving investment that are available to you. First thing, your medical insurance policies. Now, if you have taken a medical insurance policies and you are paying a premium to keep that policy in force, then in your case, maximum amount that can be claimed is 25,000 rupees that goes towards paying the premium. Now, if your parents are senior citizens, then again you can claim a benefit of 50,000 rupees for medical insurance premium that you are being paid, right? But in some off chance your parents are not covered under medical insurance because it may so happen the medical insurance organization are not extending any benefit towards your senior citizen parents, then what you can do is you can take the benefit of medical expenditure. That amount is also 50,000 rupees. Now, the key thing to remember over here is they can either claim initially the medical insurance premium. If they are not covered under any medical insurance, then only medical expenditure can be claimed. If they are covered under medical insurance, medical expenditure cannot be claimed, right? Moving on, let's stick with the medical insurance, medical things for the time being. So, if there is a handicap dependent who is completely dependent on you, then there is also a benefit for you. For that, if the disability is more than 40% but less than 80%, that is less than severe disability, in that case flat 75,000 rupees can be claimed as benefit for their medical treatment. If they are suffering from severe disability, in that case flat 1,25,000 rupees can be claimed. Now, for these purposes you must get a certificate from the medical practitioner certifying that this person is suffering from XYZ disease, and on the basis of that you can claim these deductions. And your organization may also need to see this document, this certificate from the medical practitioner, so that they can consider this item at the time of processing their your taxes, right? Along with that, if you or any of your dependent is suffering from specified diseases, then 40,000 rupees or 1 lakh rupees depending upon the age of the person can be claimed as medical expenditure under 80 DDB. Now, again, for these purposes you should obtain a certificate from a medical practitioner, and there is a list of diseases specified for this section available. So, you may need to check that list and get a certificate so that this claim can be processed at the time of computing your income and their taxes. Furthermore, if you yourself is suffering from a disability, then you can get 75,000 in case it is more than 40,000 and 40% or less than 80%. But if it is severe disability, then 1,25,000 rupees flat can be claimed as medical expenses, right? Moving along. If you have taken a education loan, from a banking institute, then whatever the interest you are paying, that interest can be claimed in your tax return as a deduction, right? Now, the best part of this education loan is there is no set limit on how much amount you can claim under interest of education loan. So, only condition over here is you must take a loan from a proper banking institute. Other than that, otherwise this claim will not be acceptable. So, for that purpose you should obtain a certificate, interest certificate similar to the home loan certificate issued by the bank, and you need to submit this certificate to your payroll team so that they can process this claim, right? So, now we are going to talk about what are the key points that you should keep in your mind while declaring your investment to payroll department, right? So, first things first, every organization has a window within which you must submit all the investment proof to the organization. In this case, you must take a note of the date. You must take a note of the window within which you must declare to the payroll team. Otherwise, if you fail the window, if you miss the window, then the claim, whatever expenses that is claimed, cannot be processed at the time of tax computation. Right? So, furthermore, every organization has a certain set of document requirement to process these claims. So, you must check for each and every items that we have talked earlier, we have discussed earlier. For them, what is the document requirement by the payroll team? So, for example, if you are making a claim for leave travel allowance LTA, then some of the organization may ask the flight ticket. Some of the organization may ask for flight ticket as well as the boarding pass. So, to be safer side, to be on the safer side, you should keep the boarding pass as well as the ticket with you, so that whenever they require it, whatever the document they require it, you can simply submit it and be assured that it will be claimed, it will be processed at the time of computing your tax returns, right? Also, one thing you should remember, that always submit the proof that is for the relevant financial year. So, every receipt, every tax saving investment, tax saving expenditure has a date mentioned to it. So, you need to check what financial year you are submitting the proof of, what financial you are in, and what financial year you are submitting the proof of. So, if the tax is being computed for financial year 2021 and if you are submitting proof for 1920, then obviously that claim will be rejected. So, please take good care of whatever the financial year, whatever the relevant financial year you are making the claim of, right? Now, after discussing all these things, we are in a dilemma, because few months back our finance minister declared that due to this COVID situation, there are many people who have not or rather who were not able to invest the money into tax saving instruments. So, what will happen? So, for that, the deadline has been extended till 31st of July. Now, if you are making an investment from 1st of April 2020 to 31st of July 2020, you have the option of declaring those investments either in financial year 1920 or financial year 2021. Now, you may be confused that in which financial year can I claim this? It actually depends upon your situation. So, in financial year 1920, if your 80C or 80D limit is not exhausted, then you may consider investing that, showing that investment in financial year 1920, provided you have sufficient investment to declare in financial year 2021, right? So, why I am saying this, you can claim the investment only once, right, either in financial year 1920 or financial year 2021, right? So, you need to be very sure in which financial you need to disclose this investment based on whether your 80C limit or 80D limit has been completely exhausted or not, and you are in a position to make further investment in financial year 2021. So, if you plan accordingly, then you can, using these investments, you can easily offset the tax liability in financial year 1920, and you can also offset the tax liability in 2021, right? However, to make this claim, to make this disclosure, you need to submit certain items. You need to submit certain items in your income tax return. It's a very simple thing. All the income tax return requires you to mention the amount of money that you have invested in the period beginning from 1st of April to 31st of July 2020, you need to disclose the total investment under each head and how much you have invested under that head in that specific period. If you just do that, then your tax return is absolutely ready and it is ready to be filed, right? So these are a quick fire discussion of tax saving instrument and what are the items you should remember at the time of declaring your tax saving investment to the payroll team, and what are the investment that you should declare in financial year 1920 or 2021 to get the maximum benefit, right? Now we are going to take couple of questions right now. So after that we are going to have a demo of ClearTax, how you can file your tax return. All right. I believe whatever we have discussed is pretty much clear for everyone. So we are now going to see how the tax return filing is done in the ClearTax portal. Right. So we are actually landed in the ClearTax platform. As you can see, it's a whenever you are in this portal, whenever you are in this section, then it will ask you to upload your form 16 that we are going to do by simply over here. Now simply dragging and dropping the form 16. Now, if the form 16 is password protected, then you have to enter your password over here. Right. So, as you can see, the form 16 has already been uploaded successfully, and all the details are already taken care of. So you can see in salary section all the details have been pulled from the form 16. I just want you to just check if all the details are being reflected properly or not. 99.999% of the cases all the details will be pulled perfectly from your form 16, but in any case you should just give it a quick look around so that you can make sure all the details are present. Right. Now after uploading your form 16, you shall be required to fill in the personal details of yours. These are pretty boilerplate stuff actually. So you have to mention your name, your last name, date of birth, PAN, father's name, etc., etc. Also you need to fill in the address of yours in this address tab, and everything is good. Now moving along, the salary portion is absolutely fine. All the data has been pulled correctly from the form 16. So now what you can do is you can add in all the other income that has not been accounted for in form 16. Say for example, if you have earned some interest income, so from savings bank account, that detail if you do not provide to your HR department, they will not account it, right? So you can mention whatever the savings bank account interest you have earned during the year. So in this case, we are going to put in an arbitrary figure over here. So let's say 8,000 rupees. Any other interest income, let's say for FDs or any other sources, you have earned some other income. So you may want to write that amount over here. You just mentioned it. And let's say you have received a certain gift from someone. Then you may need to input that figure over here, provided it's not on account of marriage, or if provided you are not receiving this item, this cash gift or any gift for that matter, from your parents or your brothers or your sister, close relatives, right? So over here we have the exempt income tab. So for financial year 1920, if you have earned any dividend from domestic companies, Indian companies, then that dividend is completely out of the taxes. However, you need to mention certain amount over here. If you have earned, let's say 7,000 rupees or 10,000 rupees, you need to mention the amount over here. Now, when I say whatever amount you have earned from domestic company as dividend, that is outside the taxes, that's not entirely correct. So if you have earned a dividend less than 10 lakh rupees, then it will not be taxed. However, if you have earned dividend more than 10 lakh rupees, then the excess amount will be taxed in your hand, right? So in any case, let's put a small number here to see what happens over here. So 7,000 rupees it has been put. If you have earned any interest from your PPF account or public provident fund account, you need to input the amount over here, right? Then save. Now if you have earned any rental income, then you need to put the figures over here. Or if you have taken a home loan, that interest benefit is already reflected in your form 16, you need to put the details of that home over here. Now the details means the address of the house property, obviously. Also if you have let this house property out, then there is an option of declaring a rental property. So you can simply from the drop down box mention this is a rental property and I have earned this amount of rent from this property. From there you need to mention the municipal taxes, the house taxes that you have paid during the year, and all the details will be calculated automatically, right? So during the year, if you have earned any capital gains, you can report the capital gains over here. So in ClearTax portal, we support Zerodha statement or CAMS or Carvey statement. So if you have earned any income, any capital gains out of these institutes, you can simply upload your report simply upload your capital gains report over here to get the details pulled and reflected over here, right? So as you can see, I have mentioned mutual fund gains over here. Now if you have any other income, let's say you have any other business and profession, maybe on side you are doing some software development, then you can input the figures over here at the income. Now for professionals, there is a excellent scheme introduced by the income tax department, the government. So you can opt for presumptive taxation. All you have to do is declare at least 50% of your taking as your profit, and remaining amount will be considered as your expenses, and you need to pay taxes on 50% of your total takings, right? Moving on to the deduction sections, as you can see, the box over here, to the box you can declare your 80C or 80D deductions. These boxes are completely editable. So if you have by any chance missed this opportunity to declare your tax saving investment during the year, you always have this option to declare the entire figure in your tax return using these boxes, these editable boxes, right? So that is for your 80C. All the other deductions, let's say for medical insurance premiums and everything, that can be inputted from here as well under more deductions. If you have, again, if you miss this opportunity to declare all the tax saving investment, then you can edit the box here, fill the box here, and it will be taken correctly. All right, moving along. If you have indeed made investment during the period 1st of April to 31st July, then you need to submit some additional details under this investment details tab. So if you have indeed invested some amount over here, you need to give a breakup of these sections, right? So again, if you have, let's say in here in this box it asks for the total amount, and in this box here it asks for the specific amount that has been invested during that specified period, that is 1st of April to 31st of July. So in this case there has no investment made, so this box is 0. So if you have made an investment, let's say 10,000 rupees during this period, so you can just put in 10,000 rupees and you are good to go. Right. Now it would, after putting the deduction section, you will be taken to the 26AS page, the taxes page. In here all the tax paid details appearing in your form 16 will be reflecting, and if you have 26AS, your own 26AS, then you can simply upload your 26AS and all the details will be pulled from there automatically, right? So and finally going into the tax filing page, you can see that there is a refund. After inputting all the details correctly, there is a refund coming, and all you have to do is just click the button of proceed to e-filing, and your income tax return will be filed. Now at the time of filing, the ClearTax portal takes certain amount of time, 7 minutes to be precise, to see whether all the data that you have inputted correctly or not is being matched as per the income tax department norms. So that is why it takes 7 minutes, otherwise it can be done within 1 minute or 2 minutes. But we have to make sure your data is being filed in a precise manner, as the manner the income tax department intends you to do. So that is why it takes usually 7 minutes or so, right? So that is a demonstration of how you can use ClearTax portal and complete your filing, e-filing, in a very short period of time. Now again we have couple of minutes in our hand, so that we can take some questions if you are having any. So process for new regime. So new regime is declared. However, you must the form for the next year. The next year is the financial year 2021 is yet to finish, and until and unless it is finished, the income tax department will not release any forms for ITR filing. So if you are switching the regime at the time of filing your tax return, then obviously we have to wait for the forms released by the income tax department. Otherwise, if you are talking about how your TDS will be deducted, tax will be deducted from your salary, then you must declare this to your employer. By default, most of the organization is sticking with the old one. They are not explicitly going with the new one. So if you want to declare your choice of regime, then you should contact your HR. Yes, Paresh, the GST, the premium amount that you are paying for insurance policies, it must be claimed inclusive of GST. Talasila, actually you don't require to submit any proof at the time of filing your tax return. However, you should keep the receipts ready with you. Surendra, if you have borrowed 50,000 rupees, so if you have borrowed 50,000 rupees, it doesn't really impact your taxation in any way. However, if you are paying interest, then your friend should show this interest income in his tax return as earning from other sources and offer that income for tax purposes. For you, it does not affect that much. Yes, Devman, PPA, PPF interest and life insurance maturity amount, assuming that is falling under exempted income, they need to be disclosed under exempted income in income tax return form. Surendra, that actually depends on in what capacity did you receive these amounts. So let's say if you have given some person some money and that person is returning you the money, then it does not have any impact on taxes. However, if you are receiving, let's say, salary or something, or any sales receipt or in Paytm or Google Pay, then that amount needs to be disclosed in your tax return, and after computing the profit, the amount will be falling under the tax ambit. Well, Hukum, if you earn PPF amount and if you are not declaring that in your tax return, see, tax wise it does not really impact anything, but you may have to answer certain question from the income tax department explaining them what is the source of this income. So if you are not disclosing that in your tax return, then you may have to face certain question from the income tax department. Well, Maksud, you still have quite a bit of time in your hand to make those investments. So you should take a note of that and move ahead with the investment. Otherwise, if you do not invest and submit the proofs of that investment to your portal, then they will not be taken into consideration while computing your taxes, and you may have to fall prey for higher tax deduction. Well, Devman, total income does not include exempt income. However, it needs to be showed. It needs to be shown separately. and which ITR needs to be filed, that actually depends upon what is the nature of your income and what is the level of that income. So if you are having only salary income, then ITR 1 will be applicable for you, but if the salary is more than 50 lakh rupees, then ITR 2 will be applicable for you. So it entirely depends upon the nature of income and the amount of such income. Well, Talasila, yes, actually, if you do not respond to 143.1, then the income tax department may consider your tax return to be invalid, and whatever filing you have done, it may be ignored, or in worst case scenario, they will ignore the defect. They will process the income tax return based on the information that is available to you, available to them, and they may come up with a demand or something like that. So you should take a note of that and respond to it as soon as possible. Then it's the taxable income. Maksud, yes, if you do it like that, then absolutely it will be fine. But make sure you are declaring everything within the time period mentioned by your HR department, and make sure you are submitting all the proofs that is required by them. Samir, actually that is not possible, sorry. Yes, Gangamal, you can do that, there is no problem. However, you must show the rental income in your tax return. Shrikant, if the tax return is, let's say, 3 years or 4 years old, then it is not possible to file the tax return until and unless you get a condonation of delay from the assessing officer. If you get that, then only it is possible to file the tax return. For financial year 18-19, there is still time till end of this month, so you can file the tax return within this date. For 1920, yes, it has been extended till 31st of December. Prior to that, if you are talking about any tax return prior to these two periods, then you must get a condonation of delay from the assessing officer, and then only you will be able to file the tax return. Yes, Hukum, it is absolutely necessary to disclose all your tax, all your incomes in your tax return, and if any tax is required to be paid, you should clear that due as well. Right. Thank you, guys. I believe we have reached the end of our session. Thank you all for joining in. I hope you have learned something, you have gotten some takeaways from our session. Thanks again, stay safe and have a good evening. Bye bye.